Okay. Good afternoon from Amsterdam. I'm really thrilled today because one of the true superheroes of the carbon finance and environmental financing industry is with us today, Richard Sandor, who's written a brilliant book called Carbon Hunters. He's going to tell us everything about the carbon industry, the good, the bad, and the ugly, or the less ugly, and also where is the market going to go as the climate change is kicking in more and more. So, Richard, for those who are from another planet and don't know who Richard Sander is and what have you done, shame on them. So, just fill us in. Who is Richard Sander? What have you been doing in the environmental finance market? Your big purpose. Why did you write Carbon Hunters? What are you trying to achieve? And ultimately, those that will listen, how can we help you?
First of all, Robert, thank you. I've really enjoyed your work over the years, so it's an honor for me to be here with you to discuss carbon hunters. I'm an economist who invents markets. I get it
Oh,
wrong a lot, and once in a while I get it right. I was trained at Brooklyn College and got a PhD at the University of Minnesota. I'm 800 years old, Robert. So I taught at Berkeley in the 60s, and everything was kind of new, and it set the stage for me to look at the world as a whiteboard. And I had studied the economics of inventive activity and wrote my PhD thesis on that. I started trading equities because of technological change and ultimately did okay, and then started trading commodities because a colleague of mine had suggested that I do that, and the result was I got involved in designing an all electronic change in the late 1960s and had to go to Chicago quite often to understand the mechanics of auction markets. I went back and forth there. I got to know people. To make a long story short, given the environment of the 60s, I had a couple of ideas that generated some interest. The Board of Trade was looking for a chief economist. They said, come to Chicago to start the research department. It was 72. And I said, I'm happy to take a sabbatical. I have two things that I'm really excited about. One is interest rate. I think that they could be commoditized, and while trading was limited to wheat and corn and metals, I thought there was a whole new world that could be opened. And the other was I was interested in weather and catastrophic events. And I had become aware of that because I wrote a journal article with a colleague on the feasibility of hurricane futures. So I was interested in weather and finance. I took a sabbatical. It started, it was great. My wife and kids moved to Chicago. We thought we'd stay a year. 1973 occurred, Robert, and all of a sudden, the Arab oil embargo, crops failed in Russia, in China, the anchovies stopped running off the coast of Peru. and soybeans hit $10 and food prices exploded. And so interest rates also moved and the prime hit 10%. And while I had tried the idea out, everybody said, go back to Chicago, or better yet, go back to Berkeley and smoke dope. Interest rates don't fluctuate. That's a stupid idea. And then all of a sudden, the world changed, and the idea didn't seem so stupid after all. The long and short of it is, I spent another year working on legislation, and this was very important, Robert, to change the definition of what a commodity was. And in effect, the new legislation allowed us to trade interest rate futures because it redefined commodities from tangibles to intangibles, any good or service for future delivery. So I learned how to work the House. I learned how to work the Senate. By the time the bill got to the Senate, we needed exclusive jurisdiction by one regulator. It turned out to be the CFTC with oversight from the ag committees because of the history of futures, and eventually launched on October 2075, the first financial future. Ultimately wrote treasury bond futures, treasury note futures, options on them, and spent a career. And I was quite happy doing that. I'm a restless guy, and somebody came to me in 1989 and said, there's a bill in Congress to try to have a market-based solution to acid rain. And do you think you commoditized interest rates? Do you think you could commoditize the air? And I, being a Don Quixote, with Sancho Panza, waved at windmills, said, sure. They said, do a paper. Could this be a real market? We're in the lime business, and we are advocating for the bill. The reason for that, Robert, is that
What was the year exactly? Do you remember?
1989.
Okay.
And then um, the reason that this group was interested, because if you pass flue gas through a lime sludge, it takes the sulfur out. So they
Okay.
were in favor of the act because they would sell more lime.
Okay.
And it was called a Coalition for Acid Rain Equity. And so I wrote the paper, and based on 18 million baseline, I thought this would be a very big market, because the way that I used to forecast the size of the market was to take the crop, and whatever that crop might be. And in this case, wheat, it was 2 billion bushels, and the futures turned over 30 times the crop. And I rationalized that there were 18 million tons. And if you put a similar multiple on it, that acid rain allowances would be the same as wheat. And I thought, wow, this is very exciting. The act got passed. I had known about trading because I had become friendly with somebody by the name of Ronald Coase, who in an article in 1960 actually argued that trading was an alternative, and certainly one of the tools that could be used with equal effect as taxes or subsidies. So I thought this has got an academic base. Ronald Coase was a friend. He had published an article that I wrote in the Journal of Law and Economics in 72 about how you start a new contract. So he had mentored me and was very encouraging. I went back to Chicago, was appointed a public director of the Board of Trade. I had been on the Border Trade Board and the CME board and had been active in the industry. So I decided to get back involved in exchange governance, not as a staff, but as a board member. I brought the idea to the attention of the directors of the Board of Trade. And I said, guys, we got a wheat complex and a grain complex, soybeans, corn, etc. We've now got a yield curve of long-term treasuries, 10 years, 5 years, options, which I had designed. I think we should look at setting up an environmental suite of products. And the
In
chairman
1989,
in
1989.
1990.
Oh, 1990. Okay.
So and they were very enthusiastic. It was Billy O'Connor was chair, and a mentor of mine, Les Rosenthal, was excited about it. He had been working on insurance products, and I was involved with that. So it was like bringing the gang together again. The O'Connors were responsible for setting up the CBOE. And Billy said, okay, let's form a clean air committee. You're chairman. Put on Les. We're going to put on Jim Thompson, who's the retired governor of Illinois, and we'll
Oh,
get a blue ribbon committee. So we set up the committee. The act was passed, and Jim Thompson was friends with Bill Riley, who was then head of
oh,
the EPA. So Jim says, come on, let's go see Bill. Do you have any comments about the act? And I said, yeah, Jim, I think they missed some critical parts of it. And let's go in and visit him. And then we'll go visit. Jim knew Michael Boskin, who was the former chair of the Council of Economic Advisors. So we went to Washington and said, you guys have got to have a lot of technical things that you missed. And among the things that you missed was there's no information about the emissions, and therefore you're never going to get liquidity providers from Chicago because only the utilities know the emissions and the traders or market makers
mm,
don't, and they would get caught blindsided. So he agreed to put a technical correction in the act that would provide that utilities had to put continuous emission monitors on the smokestack so there would not be asymmetry with regard to the information. And Jim said, you got to serve on the Acid Rain Advisory Committee because there's lots of other things. You gotta like securities, you need QSIP numbers, you need registries. It was all designed with environmental input, but the actual financial engineering and architecture of implementing a market is quite complex.
yeah.
And so I got involved in the Acid Rain Advisory Committee, And then ultimately did the trade, the first trade in the EPA. And it wasn't really a trade, Robert, like I'm going to buy sulfur allowances at 300 and sell them
Hmm.
at 310 and make $10. I went to a utility in Kentucky, municipal owned, Henderson, and they were going to borrow money, 25 million or so, to build a scrubber. And I said, hold on, you're over leveraged. You shouldn't be borrowing money either permanently or for interim construction financing. When you finish this scrubber, you're going to be below the EPA limit and you will have extra reductions to set.
Hmm.
And so I said, I'll present value them. Nobody knew what the price was. There were no really trades. The registry wasn't really developed. And I said, I'll find you a buyer. I found a South Carolina utility that didn't have enough acreage to build a scrubber. We're going to shut down the power. And I said, I'll sell you 30 years of reductions.
Hmm.
I'll finance it with a zero coupon at your cost of capital, and I can back in and discover the price based upon what the number of dollars that was necessary for the utility and what you could finance. So we did the trade. Ironically, I used because it took 6 months. I was really nervous. The registry wasn't finished. Interest rates could have gone up, and I would have been in a lot of trouble because I promised the buyer a fixed rate. So, ironically, I used the instruments I invented to hedge the interest rate risk, and the trade was done and completed. Now, if I'm going on, you tell me, Robert.
No, no, I mean, it's fascinating. People see trading and this and buy that, but you were like the Swiss Army knife initially. You were trying to not just do a trade, you were actually making the whole market happen.
That's exactly right. I was the chief cook and bottle washer. I was
Yeah.
designing the registry. I was financing utilities. I was working on helping the government design the implementation phase. I was working on the registry. I was
Who
just
is providing the finance, the debt financing?
the debt financing was I partnered with Zurich Insurance.
Oh, okay.
Who was my balance sheet, and I formed a company called Center Financial Products, which is actually the same company I have today. It changed names to
Wow.
Environmental. So I convinced Zurich Insurance, Ralph Hoopy, who is
Oh,
chairman,
yeah. Yeah, I remember him.
and Ralph was a wonderful guy. He said, Ralph, can we do a joint venture with a guy who ran Sandor, Michael Palm, and we cut a deal that I would be the R&D and trade environmental products and insurance products, and I invented some other ideas for what is now called the ILWs, over the counter ways to hedge hurricanes and earthquakes. And ultimately, it became catastrophe bonds. So Ralph was very interested in that I was working on cat bonds and new over the counter products. So I'm sitting there in the middle of all of this. It's 91, and I get a call from the United Nations, and they say, would you come to Geneva? We heard about what you're working on in acid rain, and we're going to have a conference in Rio in 92, and we've got a group of economists, some NGOs, Michael Grubb, and a few other people, and come and talk to us in Geneva and tell us what you're doing. So I got on a plane, went for 2 days later, and everybody said, "Oh, this guy actually knows how to do Maybe we should get him involved because we don't know about trading. We know about the ideas.
This was for acid rain from the UN or was about other products?
Carbon.
Oh,
They said,
carbon. Okay.
can we do it in carbon? You did it in acid rain, but
Ah,
acid rain's a local pollutant. I
ah.
said, actually, it's easier with a global carbon market because with acid rain, you could fuel switch from coal to gas. You could scrub chemically the SO2, but there were only a couple of tools to really reduce acid rain, and high sulfur to low sulfur coal, coal to nat gas. But with carbon, you had six gases, and you didn't only have CO2, you had methane, you had N2O, you had SFCs, PFCs, HFCs. And I said, there's a lot of difference. And the economist for trading the work only requires different producer emissions to have different marginal costs. And I said, it's easier. Plus, you've got a wealth of removal, negative emissions that you could use, reduction of methane, sequestration of carbon,
Mm.
etc. So um, I went down. They said, "Okay, come back." Tom Dienberg, Michael Grubb, etc. They said, join us in a panel in Rio in 1992. And
Oh,
so
okay. At Rio, at the COP.
it's COP1. It's the beginning of it all. So,
Wow.
in a tent and a side show, we've got all kinds of academics. I give the paper and I finish it and I walk out on the beach and I have a caparina. It's Rio and it's the sunset.
Yeah,
And I said, I know how to do this. I
yeah.
really do. I've been through it with interest rates, I've done it with sulfur. I know what enabling legislation is required. I know about monitoring and verification. And then the next day, we went around and went to the Tujaca rainforest outside. And Robert, if you look at the cover of the book, it's a Mark Ferez photograph of a 19th century Brazilian rainforest.
Mm.
So the stage was set, and I was determined to develop a market-based solution to climate change. Now, it was very interesting if you look
In
at
92.
in 92. And people said, why'd you do it? And I had traded commodities. If you looked at the Keeling curve, it was anything that a trend following trader would say, this looks like a good place to be because the trend is up, and therefore climate change would become a bigger and bigger issue. Second of all, we know from Simon Kuznets that if we look at a variation of the Kuznets curve, as countries become wealthier, they turn to environmental spending. Once you house people and feed people, the next thing you want for your kids is clean water, clean
Right.
air, etc. So I said, I'm very bullish on the world economy. I'm very convinced climate change is going to continue global warming. I don't really want to enter the argument about whether it's man made or not man
Okay.
made. I want to solve it based on what economists call gambler's ruin. And gambler's ruin basically says never make a bet, no matter how good the odds are, if you're going to be wiped out. And I said, I don't think that the right answer is, or right question is to ask, is the planet warming? The question to ask is, can I solve the problem at a minimum cost? Like I buy insurance, even though I'm not going to die tomorrow. I buy lots of products to minimize the risk because of a catastrophic outcome. That's how I'm going to approach the problem in a very different way. And I had looked at acid rain. Robert, the acid rain program costs about 2 to 3 billion a year. I'm going to give you conservative numbers, but they're in the ballpark. The annual benefits are about 150 billion a year. It's a
Wow.
30 to 50 to 1 cost benefit ratio. That doesn't include the 30 to 40,000 people that don't die of lung disease.
Hmm.
It doesn't include the acidification of the rivers. It doesn't include the beauty as the resulting of it. And you look at a risk reward program like that and you say, this is fantastic. And I think the same kind of things could happen with carbon. I go to the UN says to me, we're giving a talk in Glen Cove in New York,
Hmm.
and in the meantime, I had gotten to know Maurice Strong, who
Oh, sure.
convened the Rio summit, and Maurice said, nothing is happening. Why don't we try to get countries to voluntarily do it? We'll set up something called GETS, the Global Emission Trading System.
Hmm.
You know how to do this, and I'll introduce you to heads of state, and we'll get a voluntary sovereign carbon program started. I go to Glen Cove, I take my daughter with me, and I get around. It's one of these big, huge tables, and I'm all excited and pumped up. And I say to the people at the table, the only way to really do this is like acid rain. You just have to start the program and see if it works. It's theoretical, and it's like anything that's theoretical. Until you engineer it and try it, you won't know. I think it's an exciting moment. It's dead silent. Nobody seems to care.
Yeah.
So I finish the talk, and a woman comes up to me and she said, my name's Paula DePerna. I work for Jacques Cousteau. I
Oh,
was at Rio in 92. I took the Calypso up the Amazon. nobody paid attention to you, but I think that was a good talk. And I just wanted to introduce myself and say, let's stay in touch, because I think you had a great idea with a tradable carbon dioxide allowance. Nothing goes on. And I go to the White House and get served on a panel with Al Gore and Bob Stevens and Nobel Prize winners and at the White House, and Gore loves the idea
Sure.
and comes alive. Everybody else is saying this can't be done, and I
Mm.
get up and I say, I don't get it. I'm like Tom Hanks in the movie Big. What is all this negativity?
Yeah.
Guys, you just have to do it. And there was the head of the AFL-CIO,
Mhm.
American Electric Power, was Bill Nordhaus. They were very serious people. And I said, I don't think so. I think it's really easily done if done intelligently and with the right backing. Now I go to Kyoto, go on a couple of panels, and all of a sudden at 3 o'clock in the morning, trading is gavelled into the Kyoto Protocol. Now the world changes. Gore was really in favor of it. The Europeans were skeptical because they didn't like the US was in favor of it. It was Anglo-Saxon.
Oh, okay.
It was trading, and plus the fact we had argued to include agriculture, and people were concerned that the United States had such big land mass that it was going to be able to use carbon
Ah,
sequestration
okay.
and easily meet Kyoto Protocol. So that battled out, but it was included. I went off. It was really happy at times, and I kept on. I worked a little, and I represented the Kalish and Kootenai tribes in Montana. They had had a forest fire. I bought the tons that would come from reforestation. I sold them to a European investor. I worked with a landfill operator and got some tons from US landfills, sold it to Ontario Hydro. So I'm experimenting in this
Sure.
space, trying to figure out protocols, trying to broker some trades and finance my small company, and I'm eking along. Pennies at a time. I get a call in 1999. Hey, Richard, this is Paula DePerna. I just moved to Chicago. I became president of a billion-dollar foundation called the Joyce Foundation.
Okay.
You remember we met and I spoke to you
Hmm.
afterwards. I saw you. So we've seen each other in a couple of times. Do you want to have lunch? I'm interested in what you said about trying a market.
Right.
So we go to the University Club. It's an exclusive club in Chicago. You can't do business there. You can't bring paperwork. It's just not part of
Okay.
the ethic. So
Got
on
it.
the back of a napkin, I show her how a six greenhouse gas multi-industrial pilot program would work. And she goes back and said, "Oh, I'll see if I can do this. And maybe I can get you support for a pilot program, but we're a Midwestern foundation." And so it would have to be for the upper Midwest.
Right.
And I said, that's easy because it's you take Ohio, Illinois, Indiana, Michigan, Minnesota, it's the size of Germany.
Mm.
It's a big industrial part. Plus, it's got ag and forestry and and it's got chip makers, so we could get those gases in. It would be perfect. To make a longer story short, she comes back and says, I think I can create a new type of grant for you because there's interest in the board about tackling this.
Wow.
And I said, wow. She said, but you're a private company. We can't give a grant. So I
Yeah.
said, I think we can work together. And I went to Don Jacobs, who was the dean at Kellogg, and said, Don, I have a problem. This is I can't take the money. He said, you've been great. You taught the first derivatives course here. I'll make you a research professor and let's partner with EFP, the Joyce Foundation, and Kellogg School of Management, and we'll administer the grant. I said, fantastic. So now I've got a university, I've got a dean. I say, well, Don, I also want you to serve on an advisory board because this is very risky. And the way you build a market is get people of influence. So I call up uh, Rich Daly and I say, I'm forming this thing. I want you to serve on an advisory committee. You love the beauty of the city. You want to plant tulips. I call up Jeff Gordon, who's dean of Yale. I call up a bunch of people, Tom Lovejoy, who I had met in the 97 thing through another friend. I said, Tom, would you serve on this? And I collected a group of people, Clayton Yider, who was Secretary of Agriculture and head of the
Wow.
CME. So I put together a gold-plated advisory. The question that you ask, if you are really at the cutting edge of inventing a new market, you need pillars of solidarity. You need
Mm.
academic backers, you need, political backers, you need NGO backers, you
Right.
need industrial companies. So it had to have a belt and suspender look to it, given how way out there it was.
Yeah.
Remember, this is 99
Yeah.
and nobody is doing anything. So I sit there and it's three people, Rafael Marquez or Mike Walsh, an economist, Rafael Marquez, a graduate student, my secretary, and me, and we get a grant to to look into the feasibility, and we go around to 107 different companies, and I'm pleading, I'm begging, I'm cajoling, my knees are bloodied from crawling, I am saying, you got to do this. And they say, well, there's no law. And it was as bad as it gets because how are you going to convince people to join a voluntary market? And my wife Ellen says to me, can't you ever find an easy time to start something? 9/11 occurred,
Mm.
Gore was defeated. We didn't have a friendly administration. The economy was in the dregs. The dot-com bubble had burst. And I'm trying to go around America saying, cut
Wow.
your carbon emissions.
Yeah.
And so how do you get people to voluntarily join an exchange? And the first, among other challenges, is convincing these 107 people to join. Nobody wants to join, so I say, why don't you just join a design committee?
Oh,
And I will
clever.
give you a single one-page letter, one paragraph letter that says, I agree to join the design committee of the Chicago Climate Exchange. I will join the exchange if it fits my strategy and the design is viable.
Mm.
I get 27 souls to
Good
sign.
for you.
So now I relied on a term that I coined in economics called a mutual endowment effect. And there is something called an endowment effect in economics where if you take any object and you say what it's worth, and it could be a bicycle, and you might say it's worth $200.
Hmm.
But if you ask that same question to people who own a bicycle, they will say it's worth $250.
Yeah,
So
sure.
there's an endowment effect when people own an asset. So I had observed over the years that if you create a club like the New York Stock Exchange or the Chicago Board of Trade, there is a sense of ownership that the membership takes. And so I relied this and tried to create a spirit of working together to solve an intractable problem. And that's how they signed that. So then the question was, how do you design it? So we set up a manufacturing sector, a forest products
Oh,
and
okay.
sector. We set up a power sector, and we asked them all to come up with reduction tools. And we came up with the first one, what the baseline would be, similar to what was done in sulfur, and then what would be the cuts. And we went through a design process. Then we cut it down to two groups, forestry and ag, were folded into manufacturing. And then we had a power sector. And in that original group was Ford Motor Company,
Hmm.
DuPont,
Wow.
International Paper, American Electric Power. And ultimately, we finished it and we developed, and you have to name something, Robert. So we developed a 17 pager as opposed to 100 pages of Kyoto, and we called it the Chicago Accord. And
Oh,
the
good.
Chicago Accord was an agreement that these people would theoretically sign on to, and it contained a 1% reduction per year based on a late 90s baseline, and it would create covered entities and it would create greenhouse gases. So all of those things were embodied in this accord. And then we took the accord and developed a rule book for it, which was 100 pages of how specifically this would work, how the auditing would work. We built a registry because I knew how to do it because of SO2 and hired a group of programmers. By this time, I'm running out of money, and the grant is not enough to cover it.
Mm.
And so I'm simultaneously financing it. And
Oh, also, so you're doing everything.
I am doing everything. So I am now down to groveling for money as well as groveling for things. So I spend my own money and I'm choking on it. And then I go out to friends and family. Now, through an odd set of circumstances, through my nephew, I get and run into a man who really changed the course of a lot did. And his name is Father Francis Smith, and he's a Jesuit from Santa Clara University. And so I say to Father Francis, I'd like you to invest in this. And I go through my history and
Mm.
whatnot. And it's a small burial society. And he agrees to put up $1 million.
Wow.
And so I am absolutely thrilled, but
Sure.
I'm also a little frightened. The idea of having the Jesuits and the church as an investor, it's one thing to have a pension fund and a
Yeah,
bunch of
sure.
workers, but to have, the good Lord having a financial risk.
And this was a grant or this was an investment?
This was a purchase of stock
Okay.
in
Serious.
in in the Chicago Climate Exchange. So I get Bruce Rauner, who's the governor of Illinois. I get a few other notables, and I got enough people leading the round that I'm able to raise a couple of $1 million to finance it. We get to so I'm running parallel paths, right? Financing it
Yeah.
and then trying to get people involved in it. So I'm all in, Robert. I'm totally
I mean,
exposed.
you talk about it very matter-of-factly, but I can imagine it must have been incredibly exhausting and stressful.
And it was. And I finally get to the chief economist of Ford, and I say to him, look, you got to speak to Bill Ford. His father invented mass manufacturing.
Yeah.
And here's the business case. Even though it might cost you money,
Mm.
you're going to have to, at this time, join a European so you can use this by learning. So, what you
Right.
learn in Dearborn, you can apply in Dusseldorf.
Hmm.
So, he wants to do it because he wants to make Ford the greenest car company in the world. International paper, they use a lot of energy,
That's true.
but the representative realizes by sustainable harvesting and being a huge landowner, this could be a big win for
Yeah,
them,
for sure.
right?
Hmm.
Now, so they're interested. I go to American Electric Power. I'm on the board, so I have to recuse myself. They appoint somebody, and I say to them, look, this is your choice, but you are the largest user of coal in America. This is
Oh,
not
wow.
this is not going to last. You are, and you know it's not going to last. And it's 2002, and you can read the thing. So even though it's going to cost them, they know they have to get a hold of it and get in front of it. And they had
Mm.
been a big user of the acid rain program, so they knew how to trade allowances. And then I go to the DuPont and the chair of DuPont, and I said, this is a moneymaker. You can easily change the refrigerant mix and end up with a lot of surplus allowances. And for you, it is a P&L issue.
Sure.
And so nobody wanted to take the step. So in this mutual endowment effect, that should come up with it, my modified thing, I said to them, and Ford said, I'm not going to be the only one. You got to get others to join. So we said to them all, let's have a joint announcement. I'll do it at City Hall, and you can all run for cover. If it's right, you get all the credit. If it's a failure, I'll take all of the blame. And let's split it that way and announce you're joining. The letter of joining said, we agree to, and again, simplicity is the key. It was 2 lines. We agree to join the Chicago Climate Exchange and complete the membership application. That's it. The membership application says who they are, their net worth, blah, blah, blah. And it says we promise to abide by the rules and regulations. So, and attached to the rules and regulations, which is 100+ page. In the meantime, I had gotten a couple of ag economists, Nathan Clark and Murali Kanakasabe, and then I started getting a few more people because I anticipated a cash market, and I got a guy to run the cash market. And then I got a guy the 2 guys, Dan Scarborough and Mike McGregor, run the futures. I buttoned it down with a heavy compliance staff and a lawyer and a business conduct committee and a compliance committee. So another great and obvious choice was the question is, suppose they don't comply.
Mm.
Well, you got a compliance committee. They use continuous emission monitors for the utilities. They use conversion tables for Ford, take a look at all of the fossil fuels, turn it into carbon, and go out. So the last thing that went on was I called up Mary Shapiro, who is an old friend and had been former head of the SEC and the
Mm.
CFTC. She was head of FINRA. And I said, Mary, you'll never hear this question. And what I think you're going to hear is I want to be regulated.
Right.
And I want you to go into Ford, do all of the auditing, look at the bills, read the emissions monitoring, work with international paper. I'll pay you as a private service provider. And she said, why do you do that? And I said, because no company like Ford or DuPont will want to be in the front page of the Wall Street Journal being
No.
investigated by you.
Right.
And so I think the bully pulpit of tying it all together will be there. In any event, final line is, and I won't go into it, how we financed it through an IPO in London and issued shares in it. We ended up cutting emissions from the baseline was 108 polluters, the size of Germany. We cut emissions by 60%. It
Wow.
was
Mazel tov.
it was fantastic success. We sold it to ICE, the owner of the New
Oh yeah,
York Stock
sure.
Exchange, for $600 million, 7.5 pounds a share. The pound a share went to 7.5 pounds a share. The investors were rewarded. Father Francis did great. And we had given shares to the Joyce Foundation to cover their initial grant, and they
Oh,
sold it. It was just a gift. There wasn't a promise. We
right.
thought, let's do that.
That's very classy.
And then we started an exchange. And as you know, the European Climate Exchange is the largest exchange in Europe, and we started an exchange in China. So that's my story,
Mhm.
and I'm sticking to it, Ron.
But you talk about it as if, well, I contacted the chairman of DuPont. That could have taken you maybe 3 to 4 months before they
Yes.
finally respond to everybody. So people hear, oh yeah, he just made a few phone calls and everything fell into place, and they don't realize the amount of hole digging you have to do. It's not about ribbon cutting. It's about, digging the hole, doing the work.
Well, you hit the thing in the head. So Ronald Coase, who was my friend and mentor, died in 102 years
Oof.
of age. And he and I were about to go to China together. And he said to me, Richard, don't write a book with economics on how to start a market.
Yeah,
You
yeah.
you need to people need to recognize that markets are complex organizations that require law, economics, sociology, accounting. Why don't you just write a book and tell the story? And then the difficulties and complexity of trying to start a market is not a simple supply and demand market. And the story will be the best way to illustrate about how hard it is
Mm,
to start a market and how simplified the supply demand for widgets is an academic construct. And if you can explain how complex and how difficult and all the things that you have to do, that's far better than writing a book on how to start a new market.
And is CCX involved in any way in the voluntary carbon market, like Red Plus and ARR and things like that? Because I mean, that's also potentially biodiversity is can be huge, but it's
It
not
was
priced
the
well.
it was the first market that was voluntary because the whole market was voluntary. We started a mandatory market. We also started RGGI, the regional greenhouse gas,
Mm,
and the California market. And the lesson of the book is that we need a voluntary market now more than ever. And given the food for thought, utilities have become growth industries.
Mm.
AI is changing the entire nature of consumption of fossil fuels. There are people now who Silicon data, which you can go up in the web, punch in a data center, put the compute chips in, and it can tell you the compute power that you have and how much carbon you're going to need to offset it for the next 10 years, given
Hmm.
the chips you're using and everything like that. So I offer some food for thought, and one of them is that these big tech companies are going to have to be and should be involved in the voluntary market. The voluntary market with the leaders, gold standard, et cetera, the incredibly integrity council for the VCM. These are all moving towards it. And our argument, this appeared as a paper in the Singapore Economic Review, and when I delivered the paper, I said this is a clarion call for the ASEAN nations to develop a carbon market like CCX. China is on the move. They went from carbon intensity to absolute. One of the food for thoughts, we think there's going to be a big, huge surprise. And you know, Robert, if you add up European emissions to US emissions, it doesn't even come close to China.
No,
So
no.
so the big, change that could occur, and I believe it will occur, is that China will start what will become the largest carbon market in the world. Their baseline is 5 million tons, which is well in excess of Europe. So I think Corsia, the voluntary market, the growth in AI, China on the rise, and India looking forward to doing rec trading, that the voluntary markets coupled with changes that occurring using the same reasoning with Kuznets and seeing the same thing, I'm very optimistic about the market-based solutions to address climate change, either through voluntary or mandated markets. And I'm involved now personally in some companies that are working on either blockchains, tokenized assets, you know, what I call project-based carbon. They're
Right.
not ones that have additionality questions, but real removal tons. And the next step is to do what we did at CCX, that all of this doesn't mean anything unless you build penalties into a system and have clear, unambiguous standards
Does,
from my
but you've been in this space a long time. I mean, you've really rolled the stone up the hill while somebody put a rope around your waist, pulling you down, and then we put an oil slick on the hill to make sure you don't get up. So in spite of all that, you kept going. And we've seen a lot of money going into climate tech funds. Unfortunately, none of them are actually impacting climate. I mean, they'll do IPOs and they'll make money climb work sucking CO2 out of the air and raised $1 billion, but they said we produce more CO2 than we're actually drawing down. Biodiversity until now has not really gotten the attention or the potential that it should have, mainly because there's no 10x. There's no IPO for that yet. How do you see the biodiversity space, which is now mainly in the voluntary market, developing and tying into all of these exchanges? And now with the airline industry 2027 saying we got to offset and they're not going to produce enough biofuels. Are you still optimistic?
Yeah, I am. And I think that somebody's going to put together a new exchange or an existing exchange is going to come up and redo what we did at CCX
Oh,
because all you need is a price signal. We had a project in Kerala, India, which is the poorest province in India, and they had anaerobic digesters, and nobody was using them. So we went together with a not-for-profit there, and if they use the anaerobic digesters, they take the waste, put it in, the methane rises to the top, they run a copper tube into the house, they use it for heating. They save whatever, a ton, 2 tons a year. We had started with thousands of these. We got it up to 15,000. People would use the carbon credits. They'd make $20 a year. They'd use the carbon credits to buy groceries. There was a whole ecosystem. We ultimately got it up to 100,000 rural poor. The signals that you send, it's not only biodiversity in the way you do it, it's also biodiversity in endangered species, that
Mm.
there are co-benefits. In this case, the co-benefits include the girls were the people who fetched the wood. Now they were able to go to school. We need to spend a lot of time inventing and creatively rewarding people for this. And if you put a price on carbon, you do that. Isaac Bretstein, who's a professor at MIT, called me, said, I want to develop microbes that can eat carbon. I'm going to put them around the utilities. And he raised 10 million from a member. Very naive. He became Time Magazine Man of the Year because he turned it into biofuels. The message, Robert, is price changes behavior.
Yeah.
And if you can send a price signal out and create incentives, people invent and do things. If you just say, I'm going to do something without a price signal to generate inventive activity and a compliance mechanism that requires people to achieve quantitative goals, it becomes qualitative. And while that's good, it is not permanent. The EU ETS has worked. California's working, Reggie will work, China will work, and a new CCX, an ASEAN CCX, a Corsia-based CCX, a new model to create an exchange, which then can be sold to a larger entity, will be the engine of that change. So the food for thought is the trend is inexorable. And the idea is to price the externality
When
and to set up compliance schedules
mm.
that have penalties for not compliance. And as long as you do that, you have to be optimistic.
You brought up a very important part about the pricing because what a lot of people forget, as horrible as the war in Ukraine is, one of the very quick benefits, Europe reduced energy consumption by a third when the war started because the price went up like a rocket on gas and it was crazy. So everybody, well, I'll lower the thermostat, I'll put a sweater on, whatever. Nobody died, or very few people died from it, but it showed very quickly that if you get the pricing correct, you will change behavior. So I totally agree with you on that. But are you for a carbon tax or a carbon allowance or both?
No, you could have taxes, or you could have subsidies. Our fundamental hypothesis is price carbon. Okay. And if you do that, you're 90% of the way, which means use a market.
Okay.
If you want to use subsidies, you want to use taxes. And what we proved is the market could be voluntary and it could be just on the road to a mandatory market. But The important thing is to get a price on carbon. Also, remember that on the road, I've got so many scars and nicks, whatnot, don't let the perfect be the enemy of the good.
Right.
Wright brothers flew for 60 seconds. They didn't have seat belts. They didn't have safety lights on the floor. The idea is to get it working right, just the way Stephen Jobs got it right in 75, that financial innovation requires a simple working model, and the perfect is the enemy of the good. So keep it simple. And then the last thing, which I think is very important, is I called the book Microbe Hunters because as a kid and when I was growing up, I read a book called Microbe Hunters. And it was the story of Leeuwenhoek and the microscope, and Louis Pasteur and Paul Ehrlich, who invented and won a Nobel Prize in medicine and invented a drug called Salvarsan 606, which was a pre penicillin type of drug that treated venereal disease.
Mhm.
And he called it 606, Robert, because he got it wrong 605 times. And you just have to read financial innovation as trials, and mistakes and errors and failures are part of the success process. And you can't have a shrill voice if you make a mistake or get discouraged by it. This is a journey the same way you didn't start with the 747, you started with 60 seconds of flight. You didn't start with the internet, you started with a garage type of computer. The internet didn't get you, to
Mm.
AI and the Internet of Things. That industrial invention and financial innovation takes time. There is no silver bullet. It is a complex process, and as Ronald Coase says, involves lots of things, and you can't have people sending out heat seeking missiles and demand that you be perfect. You need to get it right, and you have to have a time path. In our case, that said, I'm going to stick with this for 25 years, and I'm just going to crack into the wall, back off, assess the damage, and crack into the wall again. And
But that
that's
that
what
requires a lot of resilience. And
and
also a partner who will always still believe. My biggest challenge has not been convincing the financial sector about sustainability, it's convincing my wife that we're on the right path.
well, that's the same thing. You need a partner and you need friends, and you have to make sure that you have as support from your partner, support from academics who tell you you're right and not to pay attention to the naysayers,
Mm,
a group of believers, apostles. You need to have people who are supportive so that the slings and arrows of misfortune don't stop you.
mm. Easier said than done, but so I'm totally impressed by the fact of what you've done and that you're still enthusiastic to do another one and another thing and continue to help build this industry.
Yeah, I listen. That's why I wrote the book, and that's why I shamelessly am trying to sell it because I think it's the concept of be prepared for it, do it. There's huge social benefits,
Mm,
and the idea of using market-based and private incentives to achieve social objectives can be done. They are not incompatible. You can use, and we used to say that it paid to pollute, but the Chicago Climate Exchange showed you how you can get paid for not polluting.
right.
A different idea of paying, getting paid for pollute as opposed to getting paid for not polluting.
That is absolutely brilliant. And carbon hunters, how can those that are listening, apart from ordering your book, how can we help you?
I think that you need to understand that there's no magic bullet, that command and control is not a way to stop it. You've got to transition to it and find a way to achieve reductions with no loss in jobs and promise to get inventive activity. And if you price carbon, just support it among people you know who are in industry and government, in the academic world, in the press, that part of CCX was to educate accountants, lawyers, go to conventions of environmental journalists, have them educated, educate students, educate academics, educate legislators, educate the staffs of legislators, that all of these are critical and everybody out there can be a part of the process. And that's how we achieved this success because we got 108 polluters, 500 members, people teaching it at universities, student activists. This is the way you affect change.
It's absolutely brilliant. You talk about it rather easy. Oh, we did this, we did that, but I know it's really, really, really hard. It's really long-term farming when the people you're talking to are hunters or pirates. They want short-term success. They're incentivized for that, particularly the financial sector. So I'm truly admire what you've done over all of these years and still are passionate about doing it and not letting the naysayers affect you and finding solutions because it's not only about building this IT stuff. It's actually going around, traveling around, speaking to the person, convincing them, and then most of them are saying to you, no, 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 this is not for me. This is not for me. So it's an amazing story.
Well, thank you, Robert. But I think, you're an unindicted co-conspirator here.
It
Because
remind
because because
it
people like you, uh, very honestly, and as I said to you, I've known of your work for decades, and people like you, and knowing you're out there, and there are others, and there may not be a lot of them, but if they're people that you hold in the highest regard, and they believe you're on mission, that's what you need to sustain. So for you and your 75,000 listeners, listen carefully. There's people out there who haven't lost the flame,
mm,
who people like you and I who are working on it, still doing podcasts, still
mm,
trying to affect change, that there are people who spend their lifetimes at it. And the young people need to keep that mantle going, and they
yeah.
can, and they will affect the change, and not to seek immediate gratification. Okay, you can't, it's not an
Mm.
instant message, it's not a TikTok. It is. It is hard work,
Yeah.
but that's what it takes to keep this planet healthy.
Yeah, it's farming, not hunting, and
Right.
I totally agree and admire. And congratulations on the book Carbon Hunters, and we'll push that out also through our network apart from
Ro-
the podcast.
Robert, thank you very much for the time. I'm sorry if I went on too
No,
long.
no, no,
And,
not at all. It was inspiring. You're
and
brilliant, and anyone who's listening to, oh, he really got it together, really easy. No, it was hard work.
it was. I've got calluses and scars, so
Yeah, yeah.
I
Let me
do.
just.
And thank you very much. And I'm gonna hope that either in Amsterdam on my next trip to
No,
Europe,
please do
I'm
come
gonna
over
come
for dinner.
by
My wife's a brilliant cook.
I will come by and have dinner with you and continue the
I
conversation.
let me just turn off the recording or something.